All right. Welcome, welcome. We are back. Back as we should be. Back in the saddle again. All right, what we got going here? Let's get going here. What we got up in the left-hand corner? We got the S&P 500 dropping like a rock, coming back down after I think we had some news here. A little bit of news this morning coming in at 6:30, 7:30. Let's pop up the news. There's the news. 6:30, we had the Chicago Fed National Activity Index. We had initial jobless claims. That was a big one right there. So forecast was to be 225. Let's bring this up a little bit bigger. 225,000. Census was 220. Previous is 223. Actual was 215. So jobless claims actually went down. 215 versus the forecast of 225. That's good news. The S&P, that's probably what drove that run right there. Then it kind of come down. And, well, no, because that came in at 6:30. That's probably what drove this run right here. That was a middle of the night run. All right, let's see what else. S&P Global Composite PMI Flash Purchasing Managers Index 551.51. And it's not coming yet. It says 745. Oh, we got that coming up here in just a minute. 7:45, 8 o'clock, we have new home sales. 8 o'clock, we have new home sales. 1 o'clock, we have Fed Bostic speaking. So from 8 to 1, we'll have 8, 9, 10, 11, 12, 1. Should have a little bit of a quiet market through there, depending on what else is going on. But markets have been moving a little bit lately. We haven't had those quiet, sit dead markets. We've had some movement. So that's been good. All right. Glad to be back. I missed yesterday. Woke up with a nasty headache. So I had to take a day off. Hope you don't mind. So it was a nasty headache. It wasn't one that I could work through. I had to just lay there and cover my eyes and cover my head with a pillow. You know the kind. Nasty headaches. I don't know what happened. I haven't had one of those in a long time. So, all right. When's the bell going to ring? Is it already ring? No, it did. Right there. There goes the bell. There it goes. There's the S&P up in the upper left-hand corner. That's a 15-minute chart. Up in the upper right-hand corner, we have the Dow range 6. So that one's moving a little bit more aggressively. We've got the range 10 down in the bottom right corner, and we have the Russell 2000 in the range 10 down in the bottom left-hand corner. So we're going to watch these things run just for a bit here on the opening bell. Today, we're going to learn about the magic stick. We're going to hedge with the magic stick. I felt good enough yesterday after laying there for a couple of hours to get up and at least come up and see what the markets were doing. And I put on an iron butterfly, put on a wild eye iron butterfly. Wasn't just a normal iron butterfly. It was a wild eye iron butterfly. But I was worried that we were going to have lots of movement. And I wanted to test it. I didn't feel comfortable trading real money yesterday, so I didn't do a whole lot of real money trading. In fact, I don't think I did any at all. Didn't trade anything yesterday. But I did put on a wild eye iron butterfly here in our class account. And that one, I ought to pull up and show you what happened. We did have some movement. So I didn't hedge it at all, which I probably should have. Yesterday was a nasty day. We had a big move. And I was kind of anticipating that there might be it says that I can't open that. Why is that? I can't open. That's weird. It says being edited by somebody else. Who of you is editing my spreadsheet? That's weird. Look at that market flush. Look at it go. Man, we should be trading the NASDAQ, huh? Not looking at our spreadsheet. Let's see if we can get something off here. Look at the Russell's falling all the way back down, blasted right, or NASDAQ. Take one day off, and I can't even say S&P 500. S&P 500 is flushing like a toilet. Wow, look at it go. That's weird because we had good news. So why is it flushing out on good news? NASDAQ's turning around, trying to go back up. That's going a little fast. That's the range bar 10. NASDAQ, we may need to change that. Right here in the morning, we need to slow that baby down. That's going to, if I change it here, it's going to change it everywhere, right? Let's go to 20. Come on. I got a gigabyte. How come you're going slow? I got me a new gigabyte. 1 million megabytes. 1 trillion gigabytes. I'm supposed to have a really super fast fiber optic cable came to my office. How do I switch this? Boy, I'm slow today. Okay, that's a range 20 because I changed it. This was set to range 10 and it changed this one to range 20 as well. I don't want this one on range 20. If I want this one on back to range 10, that one's range 6. And I want this one on range 20. How do I do that? Well, I have to go back in here and I have to create another tab because I got range 6. I got range 20. I got 1 minute, 2 minute, 5 minute, 15 minute chart. So I have to come in here. If I want that on a different one, I have to set up a different one. 1, 2, 5. Let's put 15 here and 5 here. Oh no, let's leave this one. Well, let's put that one 15 and make this one. Oh, how should I organize these? Let's do 6. Let's do 10 here and let's do 20 here. How about that? We'll just make these all first range bars. What this market's doing. We're not even trading. And then this one will make a minute bar. So this one I want to be a 2 minute bar. That means I got no 1 minute. Let's go to 1 minute, 2 minute, and 15 minute. Now I got no 5 and 10s. Minute. This is going to be a minute, range, range, range. All right. So that's how we're going to set up our. All right. Wow. Look at that. Look at that S&P flush. That's a 2 minute chart now, though. We want the S&P to be a 15-minute chart. Can't put on a wild eye, crazy eye, iron butterfly with the market flushing like that. That's a 15. Oh, we got the Russell. We want the Russell on the range bar 10. And we want the NASDAQ. Now that we can change them all, we want that one on 20. And we'll leave Dow on 6. We'll try that. How's that for? Let's make them all pretty Christmas lights, candlesticks. That Russell on a range bar 10 doesn't look very smooth. It's slowing down a little bit. Look at the NASDAQ's just going sideways now. Looks like it's reached its bottom. Now maybe it'll start to turn and go back up. There it goes. See if it's going to go. Break across those highs. There it goes. There's the VWAP, crossing the VWAP right now. Keep it down here. Look at that. Things flipping all over the place. Ooh, we got that aggressive, don't we? Chart overlay. Let's see. Let's switch this here. This thing here. Preferences. ATR. Wow, that's too aggressive, Land. What are you thinking there? Let's go into 7. Lucky number 7. Ooh, we're still dropped on the Russell. How are you guys out there? Let me come and say hello to a few people. We got Matt Baker coming in at number 1. How you doing, Matt? It's good to see you. Are you trading any of this stuff? I've just been dinking around playing with all my settings. I haven't even got a single trade off yet. Still watching and trying to figure out where to get in. Where to get into this thing? Holy cow, it's dropping like a rock. Hello, Gary Thomas, number 2. How you doing? We got Bruce R coming in at number 3. Matt says, like the new intro. You like that? That's we got that. We put that up there the first time and YouTube took it down. Said they didn't like our music. Said we hadn't licensed it properly. So we had to go make sure we were licensed on the properly unlicensed. And I think we got it. So I think we got it good now. And Kirk Schwartz says, good morning. We got Michael Bruce saying good morning. Matt saying no trades yet for him either. Waiting for the report coming up. Yeah, we got 5 minutes for that report. Got Kirk Schwartz saying hello. Have a short now. Oh, Kirk says he's got a short position on. Where you at? Where are you short from? What are you short, Kirk? Because, man alive, if it was on the Russell or the S&P, you're maybe even on the Dow. You're rocking and rolling. On the ES, oh, there it goes. So you're short the S&P. Way to go, man, because that thing's dropping like a rock. Let's pull that down. Let's look at a shorter time frame on that one. Okay, we're not going to be putting any options on it anytime soon. Let's look at that one on a range bar 10. Ooh, look at that, baby. Holy smokes. Wow. Look at that S&P 500. Wow, it doesn't get any better than that, guys. That's about as good as it gets. So we got to change our ATR. That's not aggressive. That's set for hedging. Let's see. We'll come in here with magic number 7. All right. So I've got that moving average in there. That's a simple moving average coming in at 7 as well. Overlay preferences, moving averages. Let's go. Let's see what that looks like if we make that exponential. Exponential. I don't know if I like that exponential. I like that simple. I do. I like it better simple. Okay, look at that. Wow, look at that thing. Hopefully you caught that whole thing all the way down. Kirk's got him a 532 put. Let's see what Kirk's got on here. Let's bring this full screen. Wow, that thing's sweet. Buy a put. Which one's your 532? 536, 535, 530. Clear down here, Kirk. Out of the money. 532 even. Oh, okay. So you bought an out of the money put, also a 532 put. 532, also a 532 put. 532 put. All right. So there's where Kirk's got him a short position. When did you put that on? Is that up for you? Out of the money put. That ought to do you well. That's S&P. Oh, on SPY. Oh, so you're in the stock market. Okay, we could go over and look at that. I want to go over and look at the stock market. I don't know if we'll have time today. Depends on what this market does. We'll see. We got a couple minutes before that news event. And Kramer sent me an email. You know Kramer, he likes me, sends me emails all the time. And he sent me an email and told me a whole bunch of stocks to look at. So I thought it'd be fun to go look at Kramer's stocks. We haven't done that in a while. We haven't looked at any stocks in a while. So I thought it would be fun to go look at some. We haven't paid much attention to our stock portfolio, and I'm worried that it's sitting over there a little empty. Not empty. It's loaded up with stuff, but we haven't been taking care of it. So I'm worried that it's got a lot of dead wood in there that we got to clean out, find out what's going on. My real money portfolio has been doing really good, though. See how we're doing right now. Oh, I'm up $465 this morning. So that's not bad. It's not a bad morning. Those are my investments. Those are not my trades. All right, all right. That thing's coming back to the 200 right now. It's bouncing the 200. So let's watch and see if it's going to curl off the 200. Not going to tell you what to do, Kirk. But right here, this is a little scary spot to be short because it's coming down to that stop sign, as old Ross calls it. Ross calls those stop signs. It blasted right past that stop sign. This is just a yield sign here. These are yield signs. This one here, that's a pretty good stop sign. We'll see if it can make it past it. If it can, you're loaded for bear, man, because if it breaks past the 200, it's going to keep right on going. Where's our Fibonacci ruler on here? Let's draw that in just for fun. This market's really doing well. Look how beautiful those trends are. Ah, man, that's beautiful. It's sitting right dead center of the Fibonacci sweet spot right now. It's got a little bit more down to get to the 61.8. 61.8 is sitting right there. It's trying to touch it now. That's another stop sign. So you got two stop signs coming in right together. You got the 200 and you've got the 61.8 right there. See if that market can continue down. We got the report coming in here in just a second. Let's pull up our report. Just a few minutes, and then we got our 745 S&P Services Purchasing Manager Index flash. I don't know how big that's going to move the market, but we got another one. New home sales, 8 o'clock. That'll move the market. I don't know why that one's not red. 51, 51, 51. Previous 51. Consensus 51. Forecast 51.4. S&P Global Services PMI flash. What the heck is that? Purchasing Managers Index flash. U.S. Services PMI fell in the first month running. So it's coming down. I don't know. Preliminary estimates, 50.9. The index pointed to a modest monthly increase in business activity that was once slowed since last November. New orders fell for the first time since last October, and employment was also reduced as firms showed a reluctance to replace department staff. All right, Purchasing Managers Index for the S&P. There it is. There's the news. Trying to fill in the blanks right now. That one came in at 54.8. Actual on the 50.9. Okay, 50.9 versus 50.1. So that's quite a significant difference. Is green. They say that's good. We should get a bounce right here. All right, is that going to make it turn? Come on, it should rally. No, no. There it goes. Can't decide what it wants to do off that somewhat good news. Come on, come on, come on. Pop it up there. Well, there's a little green to red. It's going to flush. Kirk, keep your option for a second. It might be it's not showing strength. New home sales comes in a little more than 10 minutes. Maybe it's waiting for new home sales. I don't know. That was good news, though, off the PMI. Not enough to move the market. Didn't jump, though. We're on the back side of the short side of the MACD. Oh, there, it's going to drop down, give Kirk some more money. It says, nope, Kirk, here, have some cash. Is this thing going to break? It is. It's breaking lower. Are we going to join Kirk? Why not? Let's join Kirk. Let's throw one in there. Just see if it's going to go to 78.6. Let's see if it's going to drop out of the bottom on that good news. That's kind of weird. That's what I always say, though. Don't think that those news reports are it's hard to decide whether they think that's good enough to move the market one way or the other. It's for us to know that there's a news report, but not for us to decide which direction it goes. Because that might be positive, but not positive enough. So it flushes. We think it's good news. Hey, it's good news. Not good enough. Down it goes. Kirk was right. He's got his put in there. All right. See how far that thing's going to go. To range bar 10. It's moving pretty slow. Let's go to range bar 6. Cannot. It's got a stop on it. I don't care. Let's go to 6 anyway. Oh, look at that. I can ask you that, baby. Let's just trail out on that ATR. There we go. We'll get stopped out here. If it pops back just a little bit. We're up 200, 250. And it's going to touch us right now. It's going to come back and say, you're out. You're out. Strike 1, you're out. Strike 3, you're out. Come on, go down. Give Kirk a little bit more. He wants a little bit more on his option. There we go. We got popped out 162. It was at 250 at one point. Now it's turned around. Where's it going to come back to? Is it going to come back to our Fibonacci bow tie right there? This is our sell zone right in here, right? Remember? What? What are you talking about? Sell zone, Lee? Fibonacci. It's all about the Fibonacci ruler. Remember our cheat sheet? We talked about this. See if I can get it to load here. I'll show you that pattern sitting right here. One of these patterns. There it goes, getting ready to drop again. Little pullback, red to green. Green to red. All right, see that? There's your Fibonacci bow tie. So the market comes back, it likes to go back to the previous high, the previous low, and turn, and gets into the buy zone, sell zone. And then you want to look for, that's where you look for your buys. I should change those into those candlestick charts. I should put those in. I should put those into Heikin-Ashi bars, make it easier to see. Oh, look at that. We got stopped out just as it flushes once again. We should have an option like Kirk. All right. Let's watch again, see if there's something. Oh, look at that. Give you a little trigger point right there too on the Russell. Those little bastards come back and shit, I just said a swear word. Doggone it. I got to go to YouTube confession. Those little bastards come back right there. And they stop you out. That's what they're for. That's what they're designed for. That's what they do. All you guys trailing your stops, that's what those little things are for. They come back, stop you out, and then they continue in the direction. So that's why they become good signals for entry. Wow, look at this thing go. See, same thing here. These little things come back and they stop you out. That's all they're doing, just a little hesitation in the trend to stop all the trailing stops out. And then they continue. That's why they're good entry points. those little tiny things like that. That's why they're good entry points. Look at the Dow bottoming out down here. It had its little 2-bar pullback. Those are called hunting for stops. Hunting for stops. I've never heard of such a thing. Hunting for stops. Well, if you'd been reading your Pit News magazine, you'd have known all about hunting for stops, because there's an article in Pit News magazine all about these patterns, hunting for stops and how to avoid them or how to take advantage of them. It's a great article over in Pit News magazine. Pit News magazine. What's Pit News magazine, Lan? I never heard of Pit News magazine. Oh my gosh, you've never heard of Pit News magazine? That is a great resource for you to go and enjoy. To get Pit News magazine, you just have to go over to pitnews.com and you get 3 issues for $1 for 3 months. And if you don't like it after that, hey, you can cancel. For $1, you get 3 issues. But if you want to keep it, it's only $49 for the next 12 issues. For the whole year, $49. Amazing prices. It's also got audio, so you can listen to all of the articles. You can read the articles, and there's even video on some of them, so you can watch videos. Go get Pit News magazine. Join us. It's the club magazine. It's been around forever. It's a great little magazine. It's even getting better and better. It's a multimedia magazine. That's where we had an article about gunning for stops. Looks like we're losing our downside mojo here. 5 minutes to the housing report. We can't put on our wild eye, crazy eye now. The market's just way too crazy. Kirk's making money, hand over fist. Says he's doing well. Nice job, Kirk. Congratulations. Okay. What a beautiful run that was. Woo. What a beautiful run. Are we bottoming out here? Let's go back up. Let's pull up the S&P. That's the range bar. Look, we come all the way down. Holy cow. Look at that. Went all the way from the very low, which was at 2:43 p.m. yesterday. 2:43 p.m. yesterday. So that was 30 minutes after the bell closed. That market rallied all night long. Is that what that's telling us? That did. 4 p.m., 5 p.m., 6. What in the heck after hours? That market dumped yesterday afternoon. What time was this? 2 o'clock. So that's when the market closed. Oh, and then it went sideways all night, 2 p.m. Oh, this is all 2 p.m. Oh, this is a range bar. So those are all range bars, 2 p.m. So it made all those little bars right there, all 2, and then it started to move 228, 230, 4, 5, 6. There's where it started to move this morning. So this started to move here at 2:30, 4, 5. There's where the 5 o'clock bell. Oh, that was the 5 o'clock bell. And then it made that beautiful run up. Wow. 6:30. And then it dumped all the way back down to the opening. Look at that. Wow, that's crazy. That's crazy. Unbelievable. The market let go up, down, came right back to that little red line, and then fell again. That was hard to believe. Wow, that's a crazy thing. Can you believe that? Wow. All right, let's go look at a 1 minute chart. Did I switch it? My mouse has died. I had to buy a new mouse, and I'm even having problems with my mouse. I hit buttons and nothing happens. You ever have that happen? Have a mouse die? You go buy new mouses. You go buy a new mice, you go buy a new mouse on Amazon, and you're like, a mouse, little, and I don't like the wireless ones. I like the ones with the wires on them. They're like $7, and you're like, for $7, that's got to be a piece of crap. Well, they are. They break all the time. So I buy those expensive ones. I'm like, well, I ought to buy an expensive mouse so I get a good quality mouse. And they're the same quality. They just got more buttons. And then they get in the way and you accidentally hit all those extra buttons. Then things happen that you don't want to happen. So then I went back to the little $7 mouse again because I just like the straight up cheapy little 2-button mouse with a roller. That's what I want. And they're like $5. Okay. Let's buy 9 of them and just have them on hand because the little buttons wear out like in a week. All right. Well, are we at the bottom down here? What's this thing going to do? Kirk, what'd you do? Wow, that's a big move. Look at that. It broke off of that VWAP and down. It flushed. Are we going to go back to the VWAP? Probably be choppy if it does. It'll be choppy all the way back to the VWAP. This might be a good spot. Okay, news is coming in. News is coming in. This might be a good spot to put on our iron butterfly and hedge it with our magic stick. Okay. See what this news says. There's our news. Oh, let's bring our chart up. So new home sales comes in at 8 o'clock. It is 7:59. 7:59. 0.68 for consensus 0.68. Previous was 0.69. Come on. Light them up. Light them up. Let's see what they're going to do. I still haven't sold my new home. I bought a new spec home, and it's been sitting on the market for some time now. Putting the driveway in. Last time I talked to you about my new home that I bought, I said we were putting the driveway in. And we haven't done it yet. Still sitting there without a driveway. There it is. There's our numbers. New home sales, 6. They're coming in. Okay, it's starting to bounce. Is it rallying? Is it good news? No, actual. Oh, wait. 668, 63. Previous 66. Forecast 0.68. We got 6 out. What? 6.8. We got 6.3. That's not good news. Down 4.7. We're rallying on the fact that the market was down on new home sales. Well, that's stupid. Wasn't down as far as we thought it was going to be down. Maybe that's what they're thinking. I don't know. Maybe they just wanted to get past that news event. They didn't care, and then they want to go long again. Kirk, are you out? Look at the NASDAQ. Whoa. The Dow took off like a rocket ship out of that flat bottom. Oh, that's a 1-minute chart up there. It's a range bar 6. Okay, it's hitting 200. That's the 200. See if it'll bounce back and gets, oh, the Russell gave us a rally and a little pullback. There's our entry for the Russell. We missed it. There's our entry for the NASDAQ. We missed it. Let's go over and put that back to a range bar. You're trying to trade too many things at once, Lan. I know. Leave me alone. I know I do that. Just watch one thing. More fun to watch a lot of things. Okay, we're getting a little pullback on the S&P. That's a range bar 6, though. Very sensitive. Ooh, look at it flush on the Dow. Let's wait for it to calm down just a little bit, and we'll put on our butterfly and go over to the stock market and see what Kramer has to say. I got to show you the magic stick, though. We talked about it, not yesterday because I wasn't in yesterday, but the day before yesterday, we talked about hedging with the autopilot based on the VWAP, right? So today we're going to learn about hedging using the magic stick. What's the magic stick, Lan? I don't know what the magic stick is. Well, it's a tool that allows you to hedge or trade. It's a pretty dynamic tool, and it's still in beta, and it's been in beta for about a year or two. It's been in beta for a long time. We've had this little tool for a while. Look at that Dow go. Wow. Just trade the arrows, Lan. Just trade the arrows. What's wrong with you? Just trade the arrows. I know. I know you guys are. You guys are just trading the arrows. I'm not that bright. I'm not that bright. Just trade the arrows, Lan. You've got that neat little arrow system going, and you don't even use it. I know. Oh, look at that Dow flush. That market rallied on that news, and then it dumped. That's kind of weird. Kirk, you still have your short position on the SPY? Big, long downtrend. Okay, where's the bow tie? It's right there. So it didn't break very far past the low, did it? Coming back and touching it. Is it going to break and start to go back up, or is that just a bounce? It's an up arrow, Lan. Why don't you take the up arrow? Just trade the arrows, Lan. Just trade the arrows. You're so careful, so conservative. You don't even trade. I'm trying to get something going here. Trying. The markets are so good. They're so clean. They're such nice moves. I know. Look at that. Beautiful Dow. Even the NASDAQ's doing well with the range bar 20. Just nice sweeping moves. Now you'll probably get in and it'll stop. I know. Well, it's a nice rebound. I thought it would be smooth, chop, chop, chop. And then smooth. I was looking for this next smooth. But it's going smooth. Is it going to go all the way back up to that 200? I got a trailing stop to take the next short if it wants to. I thought we'd get a ABC, Lan. ABC. I thought we might get one of those. Just take the arrows, Lan. Why don't you just take the arrows? You say it every day. Just take the arrows. I know. Trying to take the next arrow. The next arrow will come when it crosses those yellow dots. And then when it crosses those yellow dots, I got an order to take the short. It doesn't want to go short, though. You missed it. Okay. Well, it should die here any minute. Stop trending. Well, then we'll put on our iron butterfly and hedge it with the magic stick. Which one are you going to do? You got to do the S&P because that's the one that's got all the options on it. Aren't there options on the Dow and on the NASDAQ and on the Russell? There are, but they're just generally not very good. All right, so we're short again. There's the arrow. I took the arrow, guys. Okay, put your stop in. How do I put my stop in? Oh, you're on the wrong chart. Rookie error. Come on. Okay, now let's see if it'll fall. Just take the arrow, Lan. I did. There it goes. Don't overtrade, Lan. But you got to trade. There's a difference between trading and overtrading. There it goes. See if we can catch a good runner. How far is it going to go? Is it going to come down, just test this little low right here? Is it going to come down and test it? Is it going to even get down here? Or is it going to stop? Or is it going to do one of those little hunt stop for your trailing stop hunts? Going to come up, stop us out, and then continue down. Well, we're smarter than the average bear. See if he wants to go down again. If he doesn't, we don't go down. If he does, we do. Come on, average bear. Nope, doesn't look like this is a spiker. Not a spiker-rooney. Ugh. Didn't hunt stops that time. Got some new tea. It's really good. Got some of that mushroom tea. You guys ever had mushroom tea? They say it's healthy for you. Oh, here it's dropping. Here. I didn't have my order in. We're going to try it. Take a quick one. Just in case. That's a dropper-rooney. Nope, it wasn't. Okay, we're dying. We're dying on the vine. Okay, let's go do it. Let's go do it. Chart. Let's go to a 2-minute chart. And this thing's probably going to rebound on us. That's why we're going to have a hedge. That's why we're going to put a hedge on. All right, delete Fibonacci ruler. Okay, options. We're going to come in here, and I'm going to do what I did yesterday. All right, and it turned out pretty good. We're going to go in and we're going to put on our 1 day, and we're going to buy our call at the money. Let's just do it right here. It's rebounding too much. Now I want to wait for it to get back to VWAP. Okay. It's not calming down like I thought it was. This thing's really going. Wow. Anybody catch that rebound? Kirk says he's out. What'd you end up with, Kirk? How'd you do? Wow, look at this market. It's sweet. Swinging. This is what I call swing trade. Swing trading. I know people call swing trading the thing they do out when you buy a long-term position. To me, that's not a swing trading. If you go out and trade on a daily chart and you hold a position for a long time, that's not swing trading. That's position trading. It's taking a position and hanging on to it. Swing trading is buying on the swings. Buy every time you get a buy signal, sell every time you get a sell signal. Buy every time you get a buy signal, sell every time you get a sell signal. Swing, back and forth. It's called swing trading. You can do swing trading on any time frame. It doesn't just have to be out on a long-term chart. Don't get crazy on me and start using the wrong terminology. Somebody put that out into the soup, and now everybody thinks that swing trading just means position trading. Well, then what's a position trade if that's a swing trade? I don't know. Well, get your terms right. Okay, looks like it's dropping on the NASDAQ. See if we're going to take a short here. We're going to drop. It's too obvious. It's too obvious, and it's right there at the stop sign. It's going to stop us out. Don't stop us out. No, didn't want to do it. Gave up $40, giving it a shot. Right there at the 200. It bounced and didn't like it. Now is it going to just keep on going to the moon and you're going to miss it again, Lan? Well, don't miss it. Okay, I won't miss it then. But I don't think it's going to go. I think it's time to put on an option. Look at the NASDAQ's trying to flush. It's trying to flush. Yeah. If we lose this one, we're giving back more than half of what we made. So we got to stop. Stop trading, Lan. You're just going to give everything back. All right. That's it. We're done. Can't trade anymore. We gave back too much. Tried too many times. Got to stop with the green. We were at 220. Now we're at 132. Okay, let's put on our option. Okay, let's go full screen. Let's just put it on right here. It looks like it's going to go up. So this is a 2-minute chart. And we might want to do this on a 1-minute chart if you're going to hedge with this magic stick. The thing is, when you're hedging, the smaller time frame is better because you have less of a gap between your entry and your exit. But the problem with that is if the market goes sideways across your hedging tool, you'll continually flop back and forth, in and out, in and out, in and out, in and out. And then that kills you. That destroys you. It takes away all of your profits from your sold options. So there's an advantage and a disadvantage to hedging. If the market's dead, it's better not to hedge. Only if you think there's going to be a big move in the market, you want to put your hedge on. But the problem is, a lot of times you don't know when it's going to take off. I mean, yesterday there was no news and the thing took off like a rocket ship on no news, or not any news that I was aware of, or not any of news that was coming from our economic calendar, right? I mean, there's always news, but can move the market that's not on the economic calendar. This is just the government report calendar. So there's earnings and all kinds of fun things. I think yesterday Microsoft had a big show and revealed a whole bunch of new stuff. They got another one today. They're going to continuation of yesterday. So there's always news out there. All right, let's come in here and put on our option. How are we going to do it? Let's just put it on right here. We're going to come in here and we're going to sell. We got our 1-day option. So we're going to put on our insurance premium first. So we're going to sell the option. We're going to sell that one. Actually, we're not going to sell that one. I'm sorry. This is our insurance. We got to buy this one. So we're going to buy a call and we're going to buy a put. The market keeps moving. I don't know why we're putting on a neutral option strategy in a market that's going crazy. Okay, buy a put. What happened? Cancel. Okay, we're going to buy a call with 1 day. Buy a call, buy a put. Okay, so we got to buy a call and a buy a put. Let's bring the chain up. 1 day. Let's go both center. Okay, $800 a piece. All right, so let's put those on. Okay, we got those in there. So that in itself is nothing more than just a a simple straddle. No, this is a strangle. So that's a strangle. All right. So now we're going to sell our options, and we're going to do those on 0 days till expiration. And I'm going to come in here, and I'm going to, let's just do it right down here. I'm going to sell and sell. Oh, look at that. Our insurance is off. Let's put them right on top of each other. Okay, so everything's right on top of each other. All right, so we sold those. So if we go over to our positions, we got our two options. We got our straddle and our strangle. It's our butterfly. Okay, it's the wild eye, crazy eye butterfly. It's not a standard butterfly. It's a weird one. It's a weirdo. That's why I call it the wild eye. Wild eye, crazy eye, because it's weird. All right, now we're worried about the market falling, or it might go back up, might fall, go back up, it might move, right? Now we got our insurance policy in there. We bought options with 1 day till expiration, so they should hold their premium. Now, not as good as if we wouldn't gone out longer, but they should hold their premium pretty well today. But we can also hedge, and we're going to do that with this magic sticks thing here. All right. So we already learned about being able to hedge the VWAP using autopilot. You just turn that on, and if it's below, it puts a short position on. If it's above, it puts a long position on. Well, we're already short, but we're down here, and so we didn't want to wait for it to get back up to the VWAP because it may never get back to the VWAP. We want to put it on. Let's put our hedge on. So we come in here, and I draw this little line across here, and you'll notice in the preferences, this is a preference tool. It's a drawing tool. It's like drawing a trend line. All right. So you got a trend line, you draw a trend line, right? And if the idea is I've got a trend line, and if I draw the trend line, and if it goes, you just set the trend line in there, and you say, well, if it falls below the trend line, put me in short. If it goes above the trend line, put me in long. And then just go back and forth across the trend line. So I don't care if it's below the trend line or if it's above the trend line. I just want to be in the market either above or below. That's what this thing does. That's what the magic stick does. So if you come in here, you can see that I've drawn it in here, and it's just a trend line. That's all it is. And you can put it wherever you want. So you come in and see I've got it over here. This is the settings window for it. So I forced it to be horizontal. You can turn that off, and you can actually make the trend line to be on an angle. So you can say, well, if it's below this angle, I want to stay short. If it goes above the angle, I want to go long. So it's actually pretty dynamic in that regard. We're going to force it to go horizontal because this is a hedging strategy. So we're going to come in here and we're going to say, okay, if it falls below this trend line, put me in short. Now I've extended the trend line, so it's going to go all the way to the end of the day. So we're going to come in. You can see we can do a single execution, and we're going to do quantity 1. We're going to just do a market order. We could do stop limits, all this kind of neat stuff. We're coming down here. I'm not ready for you yet. Let's come down here. So, and we actually want to put this right on the green line when we get it there. We want to put it right on the green line. So, but we want to be short at this point because we're hedging to the downside, right? But we haven't got our hedge on. So I'm teaching. If I had to do this faster when you're not teaching, okay? And then this is your single execution. So you could come in with single execution. You could say, well, I want to buy, I want to sell, or I want to flatten. So if it crosses the line, it'll make a single execution to any of those things. You'll do whatever you want. You got continuous execution. So it's saying continuous execution, max number of trades. You can run that up there and say, well, I want to go 5 times or 4 times. Long only, flatten when going below. Short only, flatten when going below. See, so it's got some neat stuff it'll do. And then you got auto continuous, buy when going above, sell when going below. That's what we're going to do. All right. And we're going to have max trades. It's going to be 99. We're going to let it go 100 times, which should be plenty. Right. If it's 100 times, you're just going to wipe yourself out. But that's an infinity number. Right. So then we come in here and we go smart entry. Smart entry says that the computer is going to kind of figure out when the bid ask is above or below or whatever. All right. So that's what that's going to do. And then we got smart entry exit on new bar. So that way it won't get you in and out on the same bar. It waits for a new bar, or you can enter on a new bar. So that's a smart exit, and then fill on a new bar only. And then you can fill on overlays, but it's getting too crazy. We're just going to do smart entry. We're going to leave it on there. That means it'll go back and forth on one bar. We could come in here and say smart entry, exit on new bar, or enter on new bar only. So we only get a new bar, but then that widens your gap between the two. So it's a trade-off. Are you going to have smaller trades, smaller gaps, or more trades? Yeah, it's a trade-off. So that's where I'm going to come in here. I'm going to save that as my defaults. Now we should already be short right here. We should already be hedging to the downside. We're not. But we really want to put this on at the exact same time. And we want to have that hedge set up. And sometimes you have to set the hedge up manually yourself and then put that in there. So as soon as you get on, you see the market's falling against you, you put the hedge on, and then you put this in there, and then you stay hedged until it goes there. And if you're doing a true hedge, you don't try and lock in the profit of the order because it's going to come out at the end of the day, right? Wherever you end at the end of the day, whether you have a profit or loss, just above or below the line. So if it's at the line, you're going to make max profit on your options. This is just to protect you to the downside or the one upside or the downside. If the market takes off and moves for the day, it's going to put you into the position and you're going to have your hedge. So we could just drop that hedge right there at the green line and we'd be done. Now, anytime the market goes above that line, it's going to put you in long. Anytime it falls back below it, it's going to go short. Problem is right now we don't have a hedge on, right? So if you wanted to put a hedge on, you could. The problem is you'd have to adjust your hedge line. And our orders are up here. So you'd have to kind of finesse it. All right. Kirk rocked and roll, man. He made $350 on that move on his options. Nice move, Kirk. Sweet. Way to go. So that's our hedge line. And we're just going to leave it right there on the green line. Right now we're unhedged. You don't have to be hedged. I mean, how often do we trade these things without hedging? It's only if it starts to rally and goes above it would we take our hedge. You could put another one on. You could say, well, Lan, what if it falls? And I want to put my hedge on right here. Well, you could. Or you could just bring this down. It's on top of, I put it right on top of the line. I can't move it now. They're on top. Let's see if we can move this back. Send it back. Now see if I can grab it. Nope. Send it back. Now see if I can grab it. Nope. All right, I'm going to delete it. Okay, we'll put it back on. Okay, so there it is. Now you have to activate it. It always jumps. You have to activate it. You have to right click and say activate, and then you can activate it here. Single execution, continuous execution, activate line. But we got it set up over here so we can, this is the way we want it. So we're just going to go activate right here. And now if you move it, it unactivates it. So then you have to activate it again. So we can say, well, if it falls back up, you can have it trail too. You can have it trail on the yellow dots. It's a neat little tool. How do you get this? Lan, I don't have that in my software. You have to call the boys over at the office and you have to ask them for it because it's in beta. It's not a tool that we really have. We don't really want to hedge this thing to the upside. We only want to hedge it to the downside if it keeps falling. Okay, we'll see if we can get one of these off just so you can see what it does. And then we'll go over to the stock market. Oh, we're kind of running out of time. I don't know if we're going to go to the stock market today. We'll do the stock market tomorrow. See if Kramer will send us another email tomorrow, or if we can just use the one he sent us today if he doesn't send us a new one tomorrow. Tomorrow we'll look at Kramer's. Okay, watch and see what this thing does. See if it works. I got it. Have I got it set right? Smart entry. Auto continuous. There we go. Okay, so now we're hedged to the downside. But now it went back up. So see, this is the problem. It might just whip us back and forth across that line. Now it's down. See, we can tell it to only go on a new bar. And if it just sits there at that green line, and it goes back and forth across that green line, we get whipped in and out and have to pay a commission every single time. Now, it's not very much money from the loss and gain, but you do have to pay a commission every time. If you go with a single bar and the bars start getting long, that's a big gap. Then it could be a big loss on the gap before it switches you. So you have to decide whether you want to take the chance of having a big gap or whether you just want to pay an extra 2 or 3 commissions or 4 or 5 or 6 commissions. Because it's going to keep you on one side or other, that line. It's like drawing a line in the sand. It's just saying if the market's above it, I want to be long. If the market's below it, I want to be short. And if it just sits and bounces across that line, it'll kill you. But how often does it do that? Usually the market moves a little bit, enough to get away from the line, but sometimes it does. Sometimes it sits there and goes across that line and you just cry. But look what we're collecting. We're collecting our cost basis on the ones we're collecting. Zero DTEs. We got $1,000 in these things. Possibility of making money $1,000 if we let it go all the way to the exit or to the end of the day. So you got a little bit of money to play with. So we're up $100 on our hedge. Is that what that's saying? We're not up $100 on our hedge. We are up $125 on our hedge. All right. If that'll get back up to the red line, I'd take off the hedge, bank the profit, keep it, and put the hedge back on at the red line. Let's do that. Let's come in here. Well, I'll show you. We can do it. Watch. The thing is, if I put it on the red line, why does it always jump when I draw that dumb thing? That's annoying. Okay, so we got the still set up with the same auto continuation. I'm going to activate that. And how come it says green? I don't know. Auto continuation. It's not long only. Smart entry. All right, so we're going to put this up here. I'm not going to put it right at the exact same spot. I'm going to put just a tiny bit above it so I can get to it if I need to. Okay, so we're going to draw that right in there. And then I'm going to activate it. So if it goes above, it'll get me long at that green line. Right here, we're making $175 on our long position. If you want this tool, you have to call the boys at the office at Track and Trade. Just call the 800 number, 1-800-862-7193. Whoever answers, say, I want the magic stick. Land showed off the magic stick today. Give it to me. Give it to me. I want it. I want that thing. And they'll say, it's in beta. Why did he show it off? And then I'll get a couple of emails from different guys yelling at me. Why did you show everybody the magic stick? It's not even ready for prime time. We don't even know if it works. Works pretty good so far. Okay, we're up 225 on our hedge. You can move it if you want to. You can move that green line up. You can have it trail those. In fact, we could even come in here and just do this. Watch, we'll just come in and we'll put a trailing stop on the ATR. If it stops us out, we'll take the profit. And we won't take the short. Okay, we took that profit. Now I'm going to delete this hedge. Delete. Actually, why would you delete it? If it breaks below that red line, we go short again. I don't like it right there, though. Let's put it below this if it breaks a new low. Activate. It's not activated. Preferences. It's in the preferences window. So I have to activate it. Okay, so we're up $45 on our options strategy. And we're fiddling with this the hedge. But the hedge got away from us. I mean, the market got away from us. We should have put our hedge on as soon as we put our red line on, one direction or the other, right? But it kind of got away with us because I was teaching a little bit about the magic stick. We could just put our hedge on manually. If the market starts to move away from our position, we put our hedge on, drop our magic stick in there at the red line, and walk away. Don't touch it. Don't fiddle with it. Just let it do its thing. Land's fiddling with it. I know. So I want to maximize. I want to maximize our profit potential here with the magic stick. It's trying to go back up. It's where I want it. I want it to go back. Just don't want it to fall. I'm going to put this one right. I want it to be right on the red line. I really do. Problem is, if I put it right on the red line, I can't get to it if I want to move it or change it. Put it one tick above. How's that? Okay, reactivate it. Okay, we're going to kill this one because we don't need it anymore. Oh, I killed the wrong one. Comedy of errors. Okay, we're going to take this one up here. We'll make this one our one tick above. There we go. And we'll activate that one. And then I'm going to come in here and I'm going to put a hedge on if it starts to fall. It's like watching paint dry. Do you guys understand what's going on here? See what I'm doing, right? As it comes back to the center line, we're getting back to where we want to be. We're back to the neutral zone. That neutral zone right up here, this red line, this top red line, that is max profit on our options. That's where we want to have our hedge on. If we have to put our hedge on right here, we can. That's the thing about the magic stick. It doesn't have to be exactly on top of the red line. It's just optimal. Okay, we're short. So now I'm going to just bring our hedge line down. I'm just going to do it just right there. That's our hedge line. So we'll put it right there. And if it breaks above that, see, sometimes we'll turn on this little chart overlay right here. This is the volume by price. Where did that go? Volume by price. Didn't I just turn that on? Oh, what the heck? There we go. Number of bars. Let's give us more bars. So we kind of don't want to have our hedge where the biggest long bars are. Why? Because that's where the market's hanging out. And that's where you're going to get your hiney handed to you if it sits there and bounces back and forth across it, which is exactly where we got our hedge. Oh, and I had it deactivated. Doggone it. I'm making all kinds of rookie mistakes. Okay, so we're losing money now because land's screwing up. Ah! See if it's going to go or if it's going to fall. Be better for us if it fell a little. Man, this market's so dead and slow. I don't want to do it. Put the hedge on right there because it's going to. Our hedge would be better to be up here, wouldn't it? See where that's got no green bar? That'd be a good place for it. See if we can get there. I really like to have it right at the bar. It's coming back up, so I'm okay. I don't need my hedge to the short side. Quit dinking around with it, land. Just set it and go. Walk away. I need it. I need it in there. I want to. You're talking about such tiny amounts of money in here. Okay, it's not a tiny amount of money. That's a lot of money. It's a couple $100. What are you going to do? Wait for it to get back to the zero line. You're fiddling with it. I know. Maybe we should go on new bar because it seems like it's going back and forth, back and forth. Enter on new bar. I'd rather do that with a. Okay, once it come on, buddy, get up there. Giddy up. You're fiddling with it. I know. Just let it go. Just leave it alone. But I don't have a hedge on. If it starts to fall, I want to hedge to the short side. The problem with the 1 minute bar is one bar can get really long. It can go up and go, whoa. And then if we got it set to one bar, man, it doesn't flip till the end of that bar. And then you take a $200 loss. Maybe it'd be better to hedge this thing like this on the range bar, because then you don't get these big, huge, long bars. We'll try that. Well, tomorrow we're going to do stocks. Say we try that tomorrow. See how this turns out today with the. I thought you had all the answers, Lan. I thought you just knew everything. I don't know everything. Just trying stuff, man. We're just learning. Just trying stuff. See what's best. This is all new. We haven't had all this stuff forever. I've been trading this stuff for 30 years, but I never had these tools. This is all new. So try all this new stuff. See what it does. This is all amazing new technology. Okay, we're at max profit right now. $130 on our sold call and put already. We're right dead center, right where the. Okay, and if it goes up, that's where it's going to hedge to the long side. I think that's what it's going to do. I put it on smart entry, exit on new bar. Smart entry, exit on new bar. There's no documentation for this thing. It's in beta. They haven't even written the manual for it yet. I'm not even sure what it'll do. Okay, so we got in long, but it says exit on new bar, so it won't get out till we get a new bar that's below the line. I think that's what that's saying. Can't look it up in the book and see because there ain't one. There ain't no book. It's new technology. It's not even. It's just being written. It's not even got a manual to it yet. Okay, so now we're hedged to the long side. If that market keeps going up. But if it turns and comes back down, now see, it's fallen below the green line and it's not reversing our position. And that's because I set it to exit on new bar. But will it enter on new bar? I think it will. It should flip because it says auto continuous. Buy and go long and sell and go below, but only on a new bar is what I think. That's why we're going to keep it from going whip, 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 whip. But that's why that one bar could flush. Whoa, now we got like a $50, $500 one bar, and then it would reverse at the bottom of that $500 one bar. That's the scary part. But here it's keeping us from jumping in and out, in and out, in and out, a million times right here on this bar. We could maybe do enter on new bar. This is smart entry, exit on new bar. We got enter on new bar, smart exit. I don't know what the smart exit means. Fill on new bar only. Maybe we should just put it on fill on new bar only. Maybe that would be better. I don't know. Why is it not reversing? That's the question. I don't know. Smart exit on new bar. We got a new bar and it was below. Was it? Maybe it wasn't below. Oh, there it reversed. Fill on new bar only. Maybe we should just switch it to fill on new bar only. Exit on new bar. Enter on new bar. The worst thing it can do is just sit here on top of that green line. Go back and forth across that green line. All right. Well, I think we got it set. I think we're going to just leave it like that and let it hedge all by itself. And I'll let you know how it shows, how it turns out. We'll probably, should we set it to take it off at 25%, or since it's hedged, there's no reason to sit there and take it off. Just let her rip and roll because it's going to hedge. Why take it off at 25% and put it back on? There's no point of taking it off at 25% if you got a hedge on. Right? Am I right in that thought? Okay. No reason to take it off if there's a hedge. So you're just going to let it run all the way to the end, and you're going to let it go until you can even let it go into power hour with a hedge on. What's the difference, right? With the hedge on, you kind of want it to move. You want it to go hard one way or the other. Look at that. It went right back up to our option strike price and turned around. That's why we use option strike prices as pivot points. What? What are you talking about, Len? I never heard you say that before. I say it all the time. You come in here, you buy a call, and you drop it in there. Each one of these pivot points, each one of these strike prices are pivot points. These are areas of support and resistance. Markets like to go to these option strike prices. Why? Because they want to scare these guys out of. Market movers like to move these things to these strike prices because that's where the money's sitting. So we use those as support and resistance areas. Just keep that in mind. That's why I usually have these lines over here. They get ski-wampus once in a while. Let's come in here. Go into our chart preferences. And that's why I'll set these things to be on strike prices. So our lines are set at strike prices. See that? Boom, boom, boom. So see those? Can't see them very good on there, but those are all set at your strike prices. And that's why I set those that way, so I know where the strike prices are. Okay, so our hedge is now hedging us $200 to the downside. You're like, Lan, this is really cool. I like this magic stick. Why do we even need to trade options with it at all? Just put the magic stick on there. If it's below it, we go short. If it's above it, we go long. And then we walk away. We don't care. Come back in a couple hours and see where the market's at. You can do that. That's why I was saying the other day, I said it the day before yesterday. I didn't say it yesterday because I didn't come in yesterday. Took a sick day yesterday. But day before yesterday, I was saying it's kind of a change in your mind. So what you then start thinking, if you're trading the magic stick, is you're hedging, you're like, well, I'm going to make all my money on the hedge, and the premium collection on the options is just going to help cover the cost of every time the market bounces back and forth across the hedge. So you're like, well, the reason I've got the options is because if I hedge and it gets stuck on the line and loses me $200, $300, $400 trying to get into a profitable hedge, well, that's covered by the premium of the option. So it's kind of a mindset difference. What are we doing? Are we trying to make money on the hedge, or are we trying to make money with the options? Right? So are the options covering the cost of the hedge, or is the hedge covering the cost of the options? Just depends on your mindset. Michael Bruce says he likes the idea of just locking in some profit and then letting it run. Yeah, you can do that. But then what if it keeps running? You lock in your profit. I'm not understanding. If you lock in your profit, comes onto the hedge. I like the idea of locking in some profit and letting it run so it takes care of the commissions. Locking in the profit. So you want to put a trailing stop on this thing just far enough to cover the commissions? The problem with that is if you lock it in, let's say let's think, because there's an advantage and a disadvantage to everything we do. Michael Bruce says this market kicked his ass today. I'm sorry. It looked so easy, didn't it? Because it was swinging so easy and so nice and beautiful. But the problem with locking in some profit, let's say you come in, you're like, well, I want to lock in my profit to cover my commissions. So then you're going to come and do that. You're going to, okay, I'm going to drop an order in here. I'm going to lock in my profit. The problem is if you put that in there, okay, you drop your stop right there. If you drop your stop right there and it hits it, then it turns and it goes the other way. It's going to lock in your profit, but then you're going to miss out on the, well, what if it doesn't go all the way back and reverse your position? That's the problem. You say, okay, I'm going to put my stop here to lock in profits. But then what if it goes up, hits the order to lock in your profits, and then turns and falls once again? Now you don't have your hedge. You locked in your $25 of profit to cover your commissions, but then you don't have a hedge on anymore, right? How come that's stuck right there? So that's why that idea, I mean, you can trade like that, but then you don't have a hedge anymore. By locking in some profit on your hedge, then you don't have a hedge. That's why you just need to quit fiddling with it. Just let it go. And wherever the hedge ends up is where the hedge ends up. You're going to end up with a hedge making $2, which would be great because then you'd make your full $1,000 on your options. And if it had to pop back and forth across it 2 or 3 times, 3 or 4, 5, 6, 7, 8, 9, 10 times, the $1,000 is going to cover the commissions of having that thing pop back and forth. Hopefully. I mean, hopefully it doesn't chew up $1,000. Hopefully it doesn't just sit there and go across that red line for $1,000 loss. That'd be terrible. But when you start thinking about trying to maximize your profit potential on the hedge, then you give up the possibility of having the hedge, because then you're just going to say, well, I'm going to hedge down here. Okay, do that. Well, you can come in with another hedging tool and you can drop another one in here. You can say, okay, I'm going to drop a hedge in right here. And then you can turn that one on. We'll activate that one. Okay, so now we activate another hedging tool. And so what this is going to do is it's going to sit here and hedge back and forth at this point. And it's going to lock in that profit from what you have, but you could sit there and chew up all your profit that's down there. I don't know. I don't know the answer to this, Michael Bruce. I'm just trying to surmise it through my head and what would happen. I mean, you could come in with this. You got one magic tool right here that's hedged at that location, right? You could put this tool up here. You could activate it. Well, actually, yeah, come over here. This whole nother window that I haven't showed you. So look at this window over here. Oh, you guys can't see the doggone it. There. That's better. Now you can see what's going on. Can't see the numbers. I got to figure this thing out better. Where's it better? Right in the center. I need to figure out how to get it in the center. So now we're up 450 on the hedge. We're down 55 on the options, but that's okay. You can see one of them's making $95. We're losing 150 on the sold put. Seems to fall faster. But it's good we got the hedge on, right? Otherwise we'd be down. And then this is just our insurance premium to lower our margin requirement. So you're up 462 on the hedge. As time goes by, we're making 95 on the sold call. What we're really covering is that sold put, $150. So we don't need a $450 hedge. This is where we could do it with the micro minis on the other chart, right? We only really need a $150 hedge, but we're up a $450 hedge. That's crazy. So now we can come in here and we can say, look, I'm going to rehedge at a new location. So you could come in here, you can say, I'm going to trail. Oh, we got to turn it off. So select it, and then we're going to say we're going to trail on the ATR. And then we're going to reactivate it. And now see, it's going to trail on that ATR dot. And then it's going to rehedge at this location. And then it'll sit there and rehedge and lock in your profits. See how that would work? I mean, I don't know. Would that work? I think that would work. I think we could start rehedging at a new location. The thing is, it's going to trail on the ATR. I don't know if it's going to reverse and trail back up. I don't know. I think it does. I think it turns and it's just going to sit there and hedge wherever it's sitting on the ATRs. If it's long, it'll stir, and the market starts to rally, it'll start to trail back up on the ATR. That might be something just to turn on, let it run, see what it does. That'd be kind of cool. It will be placed on once the market is far away from the entry point. Yeah, it's gonna restart hedging down here. It's gonna lock in your profits like you were saying, and then it's gonna take the long position. It's gonna go long again, but then it's gonna hedge whichever direction the market goes, and then it's gonna start trailing on the ATR again. I don't know. I don't know if that'd make a bunch of money or not. I haven't tried it. Again, the Magic Stick's brand new. We just barely got it. It's in beta. So I don't know whether we should just turn this thing on. That might be something fun to try. We could try it on one. You're going to try and use the Magic Stick on the range bar charts. And it doesn't work on range bar charts. There's a little workaround. You can put it onto the 1 minute chart and then change the 1 minute chart to a range bar chart, and then you can have the Magic Stick. But you can't put a Magic Stick on the range bar chart. It wasn't designed to work on range bar charts, but you can kind of sneakily finesse it into being on the range bar chart. I don't know if that's really something you want to do, but I don't know. Again, it's beta. We don't know. So we're up $537 on our hedge. And we got a trailing hedge. I don't know the answer to that. It seems like to me that setup right there would be really cool. I mean, maybe we should just try that on a different chart, not here. I don't want to mess with this strategy. Let's kill this one because it's getting ready to hedge us to the back to the long side again. So let's delete that. But what if you want to lock in your $500 land? Well, that would be the way to do it because you'd lock in your $500. And if it turned and started to go all the way back up to this Magic Stick is interesting. That might be kind of a cool setting. Let's go. We got more charts than one. We can do the Magic Stick. We only have to do options on the S&P. We don't have to do the Magic. We can do the Magic Stick on anything. Let's just put the Magic Stick on the Dow. All right. Let's come in here with the Magic Stick. And we're going to drop it in here. Is it on? No. Why is my... Oh, that's a range bar. I can't put it on a range bar chart. Are we going to do the Dow or the Russell? Let's do which one's going to move? Because the market's got to move. If it goes flat sideways, the Magic Stick will kill us. More likely the Dow is going to move than the Russell throughout the day. Is it? Or is it going to be more likely the Russell's going to move? Look, we're up $650 on our hedge. Now, the way this is designed is we're going to give that 650 up if it comes back to the zero line. We're not going to lock in that 650. But maybe we should. I think the Dow, which one follows the S&P more closely? Hey, let's do it on, well, let's go to 1 minute chart. And turn on Heiken-Ashi. All right. So we're going to, let's put on the ATR. It's kind of like trail. That looks good. Okay, so we're going to trade. Let's go to our preferences. Put on the Magic Stick. Now we've got it set. How do we have it set? Over here. Forced horizontal. Extend the line. Quantity 1. Auto continuation. Max trades 99. Smart entry. Let's do smart entry on a new bar. Okay. We could do enter on new bar, exit, smart exit. I don't know the difference. Okay, so now we're going to come in and we're going to also tell it to trail on the ATR. Wait until first fill before trailing. I don't think we want that. Okay, activate. Boom. All right, so it's trailing, and now it's just gonna hedge us back and forth. It seems like wouldn't that be the same thing as just it seems like to me that would be the same thing as the autopilot just trading. I don't know the difference. Why would that be any different? Because the autopilot, if it gets you in long, it would okay. So the difference would be that it's gonna make sure you're in the market no matter what. So if it goes through this little sideways dance right here, the autopilot would not put you back in and the market go off without you. This isn't gonna let the market go off without you. Now the question is, if we put this on here, is it going to get on the opposite side of our S&P and we're going to lose as much money in this market as we're making in that one? That's one thing I don't know. Or would it hedge us and it'll lock in the profit on the S&P? So the S&P is, man, it's falling like a rock. Did anybody else catch that fall? Did you guys get in on this? I guess I could just turn the I guess I could just leave this running all day on YouTube and you guys could check in on it and see what it's doing at any given time, or you could just watch it all day. That'd be a little crazy. We'd have like an 8-hour long YouTube video. I don't know if anybody wants to see that. Put this up here, drop this down here so we can see them a little better. Okay, so we got our hedge tool trailing on the ATR. What's the difference between, I don't know. What's the difference between just well, it's a good thing we have our hedge on. That's all I can say. Good thing we have our hedge on for our option strategy. Think that'd be funny to have an 8-hour long YouTube video, Michael Bruce? Just leave it sitting here for 7 hours just to see what it does. Okay, so now the S&P is starting to come back. So we'll start losing money on the S&P, which will gain money on our options. So if we're hedging the options, that's the point. You don't really lock in your profits, right? I mean, on the hedge, it's going to come back. It'll give you whatever profits at the end of the day, wherever it kind of sits, whether it's further away or closer or whatever. But the whole idea is just to protect your option strategy. Okay, we're long now on the Russell, which is hedging. Technically, it's hedging our loss on the S&P. So now we'll start making money on the Russell, and we'll start losing, giving money back on the S&P. Man, take the profit on the S&P. I can't. It's a hedge for our option. We can't fiddle with that one. That one's got to stay where it's at. And technically, I could move this hedge over here on the S&P right on top of the red line at this point because I'm not going to move it. So we'll put it right on the red line. Go back to preferences. We got to activate that again. Okay, so now we got our hedge is exactly on our red line. That's right where we want it. Now this one's making money. This one's losing money. Now, of course, the S&P is a lot bigger market than the Russell is. So the Russell's not going to make nearly as much money as the S&P is going to lose. But it's taken away some of the pain. Kirk's like, I'm going to watch this thing over. This is a good lesson. I got to watch that again. But not much of a lesson because I don't really know what I'm doing with it. I'm learning with you guys on the magic stick. Okay, so now our hedge on the S&P is down, but our hedge on the Russell is up. And the Russell now just flipped. Now is it trailing on the ATR? I think it is. And look at the gap. See, that's the gap. It jumped to the other side to the ATR because I told it to trail the ATR. So now we got a gap. I wish it wouldn't jump to the ATR other side. I wish it would just sit there until the ATR caught up to it. And then just hedge at that location. Otherwise, we're not really doing anything other than just what the autopilot would do, right? Well, it's trailing the autopilot waits until it gets an arrow. So it would have filled the autopilot would have filled way up here. So it's a little better entry. So there is that. All right, guys, I'll let this run for a little while. I'll just leave it running for a little while. You can sit and watch it. I'm going to go do something else. But I'll just let this run and we'll see how it turns out. But I'll leave it on for a little while. Let's let it run for another hour. Maybe I'll let it run for an hour. I got to get back to my computer, though, and do other stuff. So I can't let it run all day. This is the demo account. Of course, we're learning, I guess. We'll let it run for a little while, see what it does. But then I'll let it run. It's the demo version. I can just let the demo run and then I'll tell you how it turned out. That turns out tomorrow. I'll let you know how it turned out. I ought to let you see. Did I show you the spreadsheet from yesterday? I couldn't get it to pull up because it said somebody else was editing it. I was going to show you the spreadsheet. While that's playing, here's what we did yesterday. Didn't trade yesterday. Woke up with a bad headache. Didn't teach my class online, but I came in. I put on a wild eye butterfly with a bot call and a bot put at the money, 1 day till expiration. The Fed minutes were this day, and I wanted to see how options would perform on a red news day. It took some adjustments, but we ended up at a profitable on the day, a little hedging. I also legged out of the profitable option and hung on to the loser as they returned to BWAP. Closed everything out at 16:30 after it was all said and done. I felt like I left money on the table. The market was really moving, but that's the nature of the beast. Traded clear through power hour and ended up 1,600. Our goal was 377 for the day. Our monthly goal is 5,000. We're $6,000 over our monthly goal. So these options have really been doing good for us. Not so much on the day trading, but the options really been doing well for us. So that's why we're spending so much time on the options, trying to perfect this, get a little bit, see if we can't, do a little bit more with the options. So this wild eye crazy eye has really been paying off for us this month. Okay, look at our hedge. So on our this hedge here, the S&P, we're back down to $500. But our long position on our Russell hedge, I don't know how that's going to turn out. I'm kind of curious if that's going to do anything for us, because all that's doing is the only thing it's doing is just trailing the yellow dots. It's just swinging the yellow dots. I don't know what would happen in a situation like right here. What would happen right there with this strategy? Would it sit there and go in and out, in and out, in and out, in and out, and destroy us? I don't know. Have to wait and see. So we're coming back. Why didn't you lock that in, Lan? Why was it $500? That's not the point. Kind of like a covered call. You put a covered call on and you're like, well, I've agreed. I won $1,000. So I'm going to take $1,000. Well, it could have made 2,000. Well, I agreed at the beginning I was going to make $1,000 and I was happy with $1,000. I know it would have made 2,000, but the way I set it up, I was happy with 1,000. It's kind of the same concept, this butterfly. We're going to be good with 1,000. We're happy with that. This is just going to hedge us in case they try to take our 1,000 away. That's all that's doing. So just be happy with your 1,000, and anything that the hedge gives you is gravy on top of the 1,000. Okay, that's what this concept is. This is a different thing. This is actually hedging our hedge. That's what it's doing. This is hedging our hedge. All right, guys, if you thought this was valuable and you enjoyed what we were doing today, hit the thumbs up. That's always a helpful thing. Helps the YouTube algorithm know that they should tell other people that we're having fun over here and they're missing out. Plus, it lets me know you like what we're doing. If I get lots of thumbs, I go down through all my historical videos and a lot of thumbs on that one. I go look at it and say, oh, they liked what we were doing there. I'll do more of that. So I do more of the stuff that you guys thumbs up. If there's no thumbs up on something, I don't touch that subject again. So give me some thumbs up. And for those of you who are new, hit the subscribe button. And so you'll be notified when we do these. And don't forget to swing by and pick up Pit News Magazine. Everybody needs Pit News Magazine. Get a copy of Pit News Magazine. And I'd be remiss if I didn't say, go buy my book. You can get my book of how all this stuff works. It's on Amazon. There's we got a picture of Michael Bruce. There's Michael Bruce right there. For the longest time, he had that as his picture. So there's Michael Bruce. And then, of course, this is the book. Go get the book. Out on Amazon. Just search Lion H. Turner. It pops right up. And we'll just let this run for a little while, and we'll let you guys watch it if you want to watch it. But I'm going to check out for now, and I'll check in, see how this thing's going. But at this point, I'm not going to touch it. This is a hands-off, walk-away, hands-free strategy. All right, recenter everything so it just stays. Recenter. There we go. All right, guys, we'll see you tomorrow. We'll kind of talk about how this thing turned out, and we'll make some adjustments, and we'll do it again.